Hey guys, what's going on? Jeb here, and in today's video, we're going to be doing a little bit of technical analysis on Bitcoin and the cryptocurrency markets. I'm sure you didn't see that one coming. You were probably expecting I was going to be doing something else, but alas, we are going to be talking about Bitcoin because the last 8 days or so for Bitcoin have been very, very bullish. In fact, we've seen Bitcoin actually establish a new uptrend, which I believe is turning into a new rally, contrary to the way Bitcoin has been moving over the last couple of months, basically trading straight sideways and not doing a whole lot here. We're finally seeing some volatility, some volume, and some interest from the retail investor community come back into the space, and this could be an early warning sign of a bull market. For right now, though, it just looks like a little rally, and we're going to be talking about in today's video where it could be going, and we're also going to be talking about what's gone on here in the last couple of hours, because Bitcoin has seen a little bit of a correction here. It's very common for rallies to have small corrections in them, so we're going to be discussing if that's all we're seeing right now, or if this is actually an early warning sign of something larger. I also want to touch on the S&P 500 a little bit later on in the video. I'm not going to talk about stocks too much, but there is something very promising that we're seeing come out of the S&P 500 that I will be discussing later on in the video that I'm sure many of you guys will be relieved to hear. So anyway, without much further ado, let's go ahead and get right into it. As you can see over here on the right of your screen, Bitcoin on Coinbase anyway is trading at right around $6,472.32 and some change. Not exactly a bad level for Bitcoin considering how Bitcoin has been trading here over the last couple of weeks indeed. If we go ahead and jump on over to CoinMarketCap, we can do the crypto market recap, and we can see that across all exchanges, Bitcoin is currently trading at around $6,489.51 and some change, like I said, and the daily volume's hovering around $4.5 billion, a much healthier volume level than what we've seen recently, in between about $3 to $3.5 billion. I like to see that increased volatility, that increased volume, and that increased actual liquidity in the market so that we can see the market more healthily move to the upside. When you see very low volume, that typically correlates with very low volatility and very thin order books. And when you see very thin order books, it's much easier for the market to move in erratic ways. If you only have one buy order between $6,400 and $6,800 in the market will jump that far very, very easily. So the fact that there's more volatility, more volume, that normally indicates that there's less thinning of the order books, and it makes moves to the upside or to the downside much more meaningful and makes our technical analysis much more accurate. So I'm very happy to see that volume is coming back into the space in not a major way, but definitely in a way that we haven't seen in the last couple of months. Anyway, like I said, it looks like we're seeing a little bit of a correction in the middle of this rally. By no means is the rally over, but we do want to go ahead and talk about this because we do see corrections in rallies all the time. I think that's what we're seeing right now. I don't think the rally has ended, but I do want to go ahead and talk about this because Bitcoin is down by about 0.62% here over the last 24 hours. Ethereum's trading around $215 with $1.6 billion in daily volume. Nice healthy level for Ethereum. I'm very happy with what Ethereum's looking like. If we come on over to the Ethereum chart, we can see Ethereum is currently still trading above $200. A level that I would like to see Ethereum stay above indefinitely. I don't think Ethereum ever needs to go below $200. Assuming Bitcoin can stay above $6,000, I really don't see a reason why Ethereum needs to go that low, and certainly not below its all-time low for the year of around $169. I would like to see those levels hold, at least one of them, because if Ethereum breaks both of those, probably wouldn't be that great. As you can see here, though, Ethereum is having a little bit of a retracement as well in correlation with Bitcoin. The altcoin markets and Bitcoin seem to be coinciding and correlating quite strongly today, which, well, not even today, over the last week or so, which is normally a pretty good sign, especially if they're moving to the upside, because if you see the altcoin markets and the Bitcoin markets converge in convergence of Bitcoin and altcoin markets, when you see that happen and it's moving to the upside, typically that indicates strength in that trend, and I like to see that Bitcoin and the altcoins are moving in the same direction, even if they're moving bearish, because as we can see here, if we sort by change over the last 24 hours, Eternal token does not know where it wants to go. Right now, it looks like it's going up for Eternity. A couple days ago, it looked like it was going down for Eternity, but for right now, it is up about 45%. Very good day for Eternity. Basic Attention Token is up over 10% as well. But what I was talking about is if you scroll down the market, we can see that most of the market today is red, and that's what I was talking about. We're seeing the altcoin markets and Bitcoin correlate a lot, and like I said, that typically indicates strength in the trend. Even if the trend today is red, the vast majority of the trend for the last 8 or 9 days or so has been green, so I like to see that. Anyway, if we do sort by change over the last 24 hours here, we can see that a lot of cryptocurrencies are in the red. Not a very deep red, though. We see one double-digit loser down here, also in Eternity. I can make all kinds of puns about Eternity, taking up both the biggest gainer and the biggest loser spot, but I think I'll give you guys a break. Anyway, we see that altcoin markets aren't doing all that great today, but like I said, it's not a very deep red, but it does point to the fact that the altcoin markets and Bitcoin are correlating pretty strongly right now, and I do like to see that happen. Anyway, I do believe that's everything we wanted to discuss on CoinMarketCap. We'll go ahead and look at Tether here for a second. Tether's trading just a little bit below 99 cents. Tether has basically stabilized here around 99 cents, which is not where it's supposed to be, but it's a little bit better than where it was when it was trading at like 93 cents a while back. That's not exactly what you want to see come out of a stablecoin that's supposed to be pegged to the US dollar. Anyway, getting on with the technical analysis here today, let's go ahead and discuss this little pullback that we're seeing. Shows up pretty clearly here on the actual daily chart. And if you zoom in here to the hourly chart, it shows up even more clearly. We see this little Bart Simpson pattern that we've seen so many times here over the last couple of months, really the last several months. And this is what I'm talking about. These big moves right here happen on low volatility. They happen on thin order books, and a lot of times they happen late at night. As you can see, this happened starting at this candlestick right here, happened about 7 o'clock Eastern Standard Time. By no means a late time during the night, but at the same time, it was kind of later on during the night. A lot of people in Europe, for example, may have been asleep. A lot of people in Asia may have been asleep, and a lot of people in the States very well may have been wrapping up their trading for the day, and the order books were probably rather thin. We probably didn't see a whole lot of volume moving too much into this. We saw a little bit of build up, but there wasn't a lot of volume back here preceding it, and then of course we saw a lot of volume when the candlestick actually happened. But I would imagine when you see something like this happen, not all the times, but a lot of time when you see something like that happen, it correlates with a thin order book, which is why the market's able to move so quickly, because you get one whale come in there and blow the market up, and you see this kind of thing happen. And sometimes you get a little overextended, which perhaps we were right here. Perhaps we weren't ready for Bitcoin to be trading above $6,500 again, which it may have been why we saw this little correction right here. But nevertheless, for about 3 hours, Bitcoin did correct down here to a local low of around $6,450, and right now it looks like it's back on the uptrend. Let's go ahead and zoom out to the daily chart, and talk about what this means for the Bitcoin rally. One thing I do want to bring up is the fact that Bitcoin is still above the 20 daily exponential moving average. If you guys watch the videos and you watch the color that I use for the 20 EMA, this is the 20 EMA right down here. It's colored differently because I have the 200 daily EMA set up here, which I'll be using in a second when we get to the S&P 500. But for right now, this is the 20 daily exponential moving average down here, and Bitcoin is still above it. Bitcoin is also still bullish on MACD, and Bitcoin is still bullish on Heikin Ashi, I do believe. Yes, it is. All three of those things are telltale indicators for whether or not Bitcoin is in a rally, and Bitcoin is looking bullish on all three. Perhaps that changes over the next couple of days and on into the next week. I'm not convinced. One thing I could see Bitcoin doing, though, is come down here somewhere around this 20 exponential moving average, see however it curves up, something like that, and then get a bounce there. That would be perfectly healthy. Seeing a little bit of a retracement in Bitcoin to relieve some of that pressure from the bears instead of letting it build up and then have one massive dump like we saw over here would be a very, very healthy thing to see indeed. If we saw more little pullbacks over here in this rally, we may not have seen this massive dump right here, and we may have seen Bitcoin trend upwards in a little bit more healthy of a fashion over here if that had have actually happened. So I'm perfectly fine to see a little bit of a retracement here. I'd be perfectly happy to see Bitcoin come down to $4,800, test that uptrend, test that exponential moving average. Even something like $6,300 wouldn't be the end of the world. It might be the end of this rally, but there may be one forming after that. But seeing that happen would come down and reconfirm this uptrend, kind of. We're not necessarily exactly on it, but we would also be setting a higher low. So whatever you guys think about the rally, I would love to hear your opinions on it in the comment section down below. I don't think it's over yet. I think we're just seeing a little bit of a correction right now, and I think we are going to see it continue to move up to price targets I discussed in yesterday's video. If you guys are interested in more TA on this rally and a lot more longer term TA on this rally and what this means for the market in general, you can watch the video that I'll link up in the top right. Anyway, as you guys have probably noticed over the last couple of weeks, there's not a whole lot to discuss in today's video, but I do want to go ahead and discuss one other thing, and that would be the shorts chart. If we come over here to the shorts chart, what we're going to see is that the shorts are at a 3-month low. Right over here, as we can see, shorts are down close to 20,000 on Bitfinex. We're seeing almost 20,000 shorts. We've seen about 12,000 shorts fall off. I don't really know where they went, but they're gone anyway. And we see a massive blood fall happen right here. And Bitcoin is not exactly responding in a very bullish way. That's one thing I do want to bring up to the contrary of what I've been discussing about this being a very healthy rally, is the fact that many of these shorts have, well, fallen off. And like I said, I don't really know where they went, but the fact is they're gone. And normally when you see shorts fall off, typically Bitcoin really likes that and tends to have a little bit of a pump. And that hasn't really happened recently. We haven't seen Bitcoin be very bullish. Now, of course, this has coincided with bullish price action on Bitcoin, but not as much as you would normally see when you lose a third of Bitcoin shorts. Normally, you would see Bitcoin tend to pump a little bit more. Typically, you would see Bitcoin move a little bit faster. And one thing that concerns me is, what if all of these shorts falling was really the only reason that Bitcoin was pumping? And now that Bitcoin shorts are so low and not likely to go much lower, does that mean that a lot of the strength and a lot of the fuel for this rally is gone? I'm not going to answer that question. I'm going to throw that back to you guys. Tell me in the comment section down below, what do you think of that? Do you think the fact that the shorts have fallen so far and that not many more of them are probably going to fall off? I don't think we'd probably go below 17, 15,000 shorts. Does that mean that this Bitcoin rally has lost a lot of its fuel in covered shorts? Tell me in the comment section down below what you think. I'm just coming here to tell you guys that Bitcoin is at a 3-month low for shorts. We haven't seen shorts this low since over here in early August. And we do definitely see them very, very low right now. There are a couple different ways that you can take that. You can take that as a contrarian signal, saying that the retail investors, many of the people here that are making these shorts, don't know what they're doing and that you should be betting against them. They're saying that we should be removing shorts and that we should be seeing Bitcoin go up from here. You could take that as a contrarian signal, or you could agree with them. That really depends on the market. Right now, I'm inclined to believe that I agree with them. I do think Bitcoin's going to go up because of the other technical analysis we see. But sometimes when shorts are rallying, that may be at the end of a downtrend, that may be at the beginning of a downtrend. And sometimes you may see the opposite where the shorts will tell you the exact wrong thing. For example, I could show you many examples, but my point is that sometimes you don't want to go on and agree with what the shorts chart shows you, and sometimes you do. Right here, I'm inclined to agree with all these people that are covering the shorts right now and expecting Bitcoin to go higher. Anyway, like I said, not a whole lot to discuss in today's video, but there is one important thing that I wanted to leave to the end of the video. And that would have to do with the S&P 500. Now, the last time I covered the stock markets, I asked you guys if you were interested in seeing more stock market content. I got a resounding no in the comment section, which is perfectly fine with me. I'm more comfortable in cryptocurrency markets. Tell me in the poll in the top right if you'd like to see me cover stock markets more, because of course they may not be the market that you invest in, but they are important for the global economy, which would be one of the main reasons I would be covering them, and one of the main reasons I'm going to be talking about the S&P 500 today. And what I'm going to be discussing on the S&P 500 today, if you guys aren't familiar with stock markets, essentially the S&P 500 is an indice. It's an ETF actually of the top 500 cryptocurrencies. I'm still in the cryptocurrency land, guys. The top 500 publicly traded companies in America. And what we see right here is very, very interesting, because there's a very important exponential moving average on the S&P 500, and that would be this line right down here. That's why I have my exponential moving average up here changed a little bit. As you can see, I have the fourth one as the 200. And this is a very, very interesting trend right here, because this 200 daily exponential moving average is a very important exponential moving average on the S&P 500 and on many other traditional finance markets, their charts. Because what you see is that oftentimes when the market goes below this, it's typically not very good for the market. We've seen a lot of early warning signs that the U.S. stock markets, and of course if the U.S. stock markets, then the rest of the world markets may be going into some kind of recession. I haven't been calling for that, partially because I don't cover stock markets, partially because I don't really see a lot of evidence for it, partially because I don't think it's going to happen. But I do want to go ahead and show you guys this, because this was rather interesting. The last time we saw Bitcoin, the last time we saw the S&P 500 go below the 200 daily exponential moving average was right over here in the end of 2015 and the beginning of 2016. There was a lot of political turmoil going on at the time, having to do with the candidacy of President Donald Trump. We saw a lot of things like that going on. We saw a lot of instability in the markets, a lot of things happening with Barack Obama. I'm not going to get into politics here today, guys. The markets weren't looking as healthy then as they are now, of course. Well, as far as they were about 2 years ago, they haven't looked all that healthy in 2018. But my point is, the last couple of times that we've seen the S&P 500 go below the 200 daily exponential moving average, not a whole lot happened. Right here and right here, we did see a rebound, but that's partially because we were in a bull market and expecting the market to continue northerly from there. But right over here, when we were towards the end of a bull market and we saw the S&P 500 go below the 200 daily exponential moving average at the end of a bull market here, we saw what was known as the 2008 financial crisis and the Great Recession, as people are starting to call it a decade later now. I do remember living through that. It was hell on earth. It was not a good time, and I don't really think we're going back there. But the reason I'm bringing this up is because a lot of people have been calling for recession, partially because we've gone below the 200 daily exponential moving average, partially because of all the red that we've seen. As you can see here, I've talked about this on Bitcoin before. We saw a lot of red here in the S&P 500. We saw 1, 2, 3, 4 green candlesticks, 5, 6, and most of the other days were red. That's not really what you want to see out of a stock market that plays on just about every facet of the global economy. You really don't want to see a market like this start looking bearish. And luckily it hasn't. As you can see here on the 7th of November, yesterday, we saw that the S&P 500 has gotten back up above the 200 daily exponential moving average. Now that's really good news. I didn't like seeing the market down there. I do like seeing the market rebound. A little breach and a fake out of this 200 daily exponential moving average is by no stretch of the imagination the beginning of a recession. There were a lot of warning signs. There are still a lot of warning signs. The markets aren't looking all that healthy. You can tell by the kind of stagnancy that we've seen in 2018, but I don't think we're going into a recession quite yet. The trading day hasn't actually opened on the S&P 500 just yet, so we're going to see what happens here today. Anyway, guys, like I said, tell me in the poll in the top right if you'd like to see me cover stock markets more, and I will do so. But other than that, I think that's going to do it for this video. Like I've talked about in previous videos, there are new videos coming to the Cryptocurrency Technical Analysis Academy, probably within the next week or so. I haven't nailed down an exact launch date, but it's probably going to be within the next week, most certainly within the next 10 days. There's going to be 5 new videos releasing to the course, but 24 hours after I release those videos, I'm going to be raising the price to $149. So you guys may want to go ahead and get in now before the price rises. And of course, if you're in the course, you will be getting all future future content, you can click the link in the description down below to see what we have to offer. I do think it's a very, very good product, and I do think it's well worth your money, but that is eventually up to you guys. Anyway, like I said, tell me in the comment section down below what you think of the technical analysis in today's video. Tell me what you think of me analyzing stock markets in the poll in the top right, but that's going to do it for this video, guys. I do want to thank each and every single one of you for watching, as always, and I will see you guys in the next video. Peace.